Okay, first things first, and if you read the title, you know why you're here. $500 is a lot of money for a lot of people. And I know finance and YouTube and TikTok all blow it out and make you think you need thousands to invest, and it's just not true. The only thing you lose out on by not investing is time. The more time you waste, the price goes up. And so you're losing out big when you do this. Like when I tell you this, I promise you that $500 over time is seriously life-changing. You just have to know where to put it or even put it in the right places. But the one thing you have to realize is the more time you waste, the more you lose. Okay, so step one, before we put any money in at all, think about this. If you can't afford the 500 and if you think you might need it for like rent, or if you don't have an emergency fund yet, those are your priorities. But if you have 500 that you're willing to put in and not think about, then you can move forward. But until then, you can't. But step one to actually putting the money in, you got to pick your platform. I personally use Schwab. In the past, I've touched Webull. I didn't like it that much, so I moved on. I tried SoFi's because I banked through them. And I just think Schwab is better overall in my opinion, so I use Schwab. And I think that it's something you could do, but it's all up to you. It doesn't take long to set up an account, but I personally use Schwab. So now you set your account up on whatever brokerage you want to use. Your first thing you're going to see is just stocks. You're going to see a bunch of different stocks with a bunch of different prices, and it's going to throw you off your game. When I first started, I was worried because I seen so many different stocks, and I thought I had to be so up to date with the news so that I didn't lose money, but that's just not true. And so my advice to any new investor is look at the S&P 500 or VOO. Now, why this one? Because this is an S&P 500 ETF bundle of the top 500 stocks. And when you buy this, you're not just buying an individual like Microsoft. You're basically betting on the US economy, which historically goes up. It has an annual return rate of 8 to 10% and is super promising. At the time of recording this, the VOO stock is at $602. But don't be discouraged by that, thinking you can't afford it, because you can. Because there's a thing called fractional shares. You can buy a portion of a stock. Because I didn't know that when I first started either. And when I first started, I thought, wow, I can only buy penny stocks or little stocks. It just wasn't true. Once I figured it out, I tried buying some Tesla shares that were fractioned, and it returned great. And so with the S&P 500 and the $602, obviously with your 500 you can't afford the whole share, but that's okay because you can buy fractions of it. And so now let's talk about the dollar figures we're spending. So 350 to 400 of those dollars I want to put into the S&P 500. The return is just too promising, and it's just too big of something you need in your life long-term investing wise. So that is what you're going to buy. The remainder is going to be something you believe in, a growth stock, something that you can put in that you could stand behind. An example, like I kind of traded it, to be honest, more of a day traded thing or a swing trade, is last summer all the way till October. Navitas or NVTS, I bought in on the summer big, and it was at like $6 or so. And I had it, and I knew something was going to happen big with it because they were working with NVIDIA. They worked with NVIDIA and they produced something for them. So I knew there was going to be something big in return. And I had a good portion of shares with them, and they jumped to $17 and I sold. So, that's not a good example of long-term investing, but that was just something I believed in and I knew was going to grow. So that's something you got to do. That's a little bit of research you're going to have to do on your own, but for sure you're going to have the S&P 500 to fall back on and put money in consistently. The next thing we need to address is fear. Now, why do we need to address this? Because people check their portfolios every day, every hour, so often, and a lot of the time they're going to see red. Stocks go up and down way too easily. It's just something that is going to happen. You're going to see red. If you buy in, it could drop a penny and it's going to be red. So check a week max or anytime you're going to invest. Because if you check so often, you're going to get discouraged so easily. So what I would do is that minimal checking, and then maybe honestly even only check when you're going to put money into it. If you're worried about losing money, don't. Every time the market as a whole, or even the S&P 500 drops, it recovers stronger. It goes up and up and up. It just does. It's the way it's going to happen. That number on your screen might change temporarily, but really you only lose money when you sell when it's down. It's more than likely going to go up, especially speaking for the S&P 500. So you're better off keeping it. Don't panic sell. It's just not worth it. So yeah, that's my advice as a 20-year-old who's been investing consistently for 2 years now. That is what I can offer. I'm making this content because I'm a youthful adult who's learning big on investing, and I want to share that with you. My goal with this channel is to share what I learned and help you guys make some money too. Honestly, if you're a young person like me, or even late 20s, 30s, honestly, age doesn't even matter. You can always start at any point. You can follow or subscribe with this channel, and I will be making content on trying to help that.